The stock market took a deep hit in recent weeks, all thanks to an AI newcomer that nobody saw coming. Jedediah Collins here with the Money Vehicle Movement podcast, where we're trying to make financial literacy more current and even possibly a little even cooler. If you heard rumbles about DeepSeek, that's because it caused quite a stir on Wall Street. In fact, it caused the markets to take a significant tumble, mostly because a number of tech companies such as Nvidia, Microsoft, and others saw their stock prices decline drastically. What spurred the news was that DeepSeek, which is a Chinese AI company, reportedly developed an AI model similar to others on the market. But the difference is that DeepSeek claims to have done so by using significantly fewer resources, being computer chips and processors, and drastically less money. As such, if a company like DeepSeek was able to create a product that's more or less on the same level functionality as some of the others, but doing it in a much cheaper way, we're talking almost 10% of the others' costs, that could spell competitive trouble for some of the bigger companies. Accordingly, as we know, stock prices fell as investors, well, kind of freaked out. So, all of this to say, some of those companies, like OpenAI, have come out and claimed that DeepSeek copied or inappropriately stole their model, only to create their own DeepSeek model. That's particularly rich since these AI models have all been developed and trained mostly by copying or stealing other people's content and programming. That's a discussion for a different day, but the point is that DeepSeek clearly rattled the cage, and investors are now paying attention not only to DeepSeek, but to what other opportunities are out there in this market that we thought was just going to go up. Well, people at Money Vehicle understand nothing just goes up. What does this recent revelation mean for the rest of us? Mostly that the market is fickle. We know this. It is unexpected, and as unexpected news comes, it is going to shake the market up. This is why it can be important to have an investing strategy and stick to that strategy even when the shaking of the market occurs. If you were to panic and make changes to your portfolio every time a headline moves the market, you'd never get anything done and probably hurt the chances of your long-time returns over time. As we look at this, we have to have an investment strategy that fits your tolerance and your time horizon. It cannot be depicted based on a headline or a new thing or what's coming next, because you cannot control that, and the market will react in the short run, but it will be real in the long run. One way that you can buoy your portfolio during times of volatility: diversification. Diversity means it is, well, not putting all your eggs in one basket. Simple as that. As we discuss all the time at Money Vehicle, diversifying your portfolio means that you are going to invest in anything and everything all at the same time. Different types of securities, different companies, different sectors, different countries, all of it. That way, if one particular part of the market is affected by a headline, the other part should be at least partially shielded, and your overall portfolio's value shouldn't take such a sizable hit. Be average index. Case in point, if you had invested all your money in tech companies, let's say Nvidia, the DeepSeek headlines probably cratered your portfolio's value in a very short amount of time. Not all the way, but it lost a significant percentage. That can be very difficult to stomach your risk tolerance. Conversely, if you had a more diversified portfolio with a quarter of it invested in tech and the other 3/4 invested in other sectors, it would have still lost value, just not as much. And I know some people are saying, well, Nvidia went up so much over. You have to guess too many times in day trading or active investing for the average investor. We look at things over the long term, and over the long term, you will create bigger returns by avoiding big losses like this last week. Remember, you only lose money when you decide to sell. Realized versus unrealized. If you have unrealized losses, it's just like unrealized gains. They are not real until you decide to sell. The market has always recovered over time, so remember your strategy, stick to it, and continue to see things as an investor over the long term. Again, Money Vehicle Movement, rolling and going. We will see you at the next stop.